Hello guys, good morning. In this video I will try just to explain how to short a stock. You know, a lot of subscribers, a lot of viewers ask me, okay, can you make more videos on shorting, because we need to know how this works and how you short a stock, what kind of stock you short, and the thing that is related to shorting. Now, the reason I don't want to explain that much, because short selling is for advanced traders. You understand me now? It's not for beginners. Okay, if you are a beginner, I advise you not to do shorting, because the risk is more than buying long. It means when you buy, when you expect the stock going up. Now, why is that? Okay, suppose that you buy a stock with $10. Okay, let's say just we give a theory here. Okay, now you think that it is going long. Okay, so you buy it and you wait 1 month, 2 months, 1 year, 2 years. Suppose that you are like those guys who hold the stock for the whole life. You marry the stock. This is what they call it. You marry it. Okay, you marry the stock, and you have done research that this company is good, it's nice. Okay, all the kind of stuff that the people say, and the analysts say, scammers say also, promoters say also, this company is good, just buy it and hold it for the whole life. Now, for many years the stock has gone down from 10, it goes to 8, 7, 5, 3, 2, 0, until it sinks. Okay, this company is losing business, but you think it's good per company, but it is not. In real life it is not, and no one will tell you. Okay, those promoters, they ask you to buy it, although it's losing money, but no one tell you. Even if you go to the financial statement, sometimes it's not true, because it is so difficult to understand. Because who put the numbers? Okay, is it a third-party company that looks at the company and checks if it is correct or no? No, it's the company that puts the numbers. If they say our company is having good earnings, sometimes it is not. They put it just not to let the investors flee from the stock and sell off. Okay, now, but you see that the stock going down, and then one time you lose all your money. It means if you buy 100 shares with $10 and you end up with cents, 10 cents or 15 cents or 1 cent, so you lose almost your money. Now this is when you go long. This is I'm having this scenario is just to let you how things work in trading and investing. Okay, now you didn't put stop loss at 950 or 980 or something. It was 10, it goes to 9, it goes to 8, 7, and you hold, and you think and you hope that the stock will go up and the company will redress itself. Okay, now in shorting, suppose that a company you want to short, you hear a lot of noise that the company is not good. Okay, the company is going to be in bankruptcy, the going has lost everything. You see the news and you tell yourself, okay, this is the good opportunity. It's $10. I know this company will go south. It means it will go down and I will make too much money. Okay, you buy, just the same example as before. It's $10. You buy 100 shares. It's $1,000. Okay, this is what you do. It's the same as going long, but you should go down. Excuse me, drinking my coffee. Now, a few days later, the stock is going up. Okay, what does this mean? It means that you are losing money, because you are shorting. You're thinking that the stock will go down. So you sell the stock at 10 o'clock. You sell the stock at $10, And if it goes lower to 8 to 7 to 6, you cover your short. It means you buy again the stock and you make the difference, which is the profit. Okay? But the thing has gone against your will. The market has gone up, not down for this market, for this stock. You don't know why. No one knows why, but it seems that a mutual fund is buying this stock. Okay, this company is going. They say to you is going to go bankruptcy, but unfortunately, there are something hidden, and other guys are buying the stock and buying the company, and in a few months, this company is making good profits, and things change. Now, what will happen to you? Now, instead of putting a stop loss at 11 or 12, okay, so you lose $100, $200, and you get your money back. What you do, you say, no, I have read the news. I am sure that the company will go down again. Even if it goes up again a little bit, $1, $2, $12, $15, it will go down because I am sure. I am following someone in the internet, online, and he is the best analyst in the world, and he says this company in 1 year, 2 years, it will be bankrupt, and you will never hear about this company because it will not exist, because it has lost all the money. Now, 1 year, 2 years, 3 years, the stock begins to go to 20, 30, 40, $100. You know what does it mean? It's not the same as going long. When you go long and the stock goes down, you lose only if you lose all your money. That's it, what you lose. You lose $1,000. But for shorting, why it is so dangerous is that shorting, if you short a stock and it goes up, the loss will be unlimited. What does it mean unlimited? If the stock goes from 10 to 20 to 30 to 40, so you lose your money, 1,000, and then you lose 2,000, 3,000. From where do you lose this? The broker will ask you to put money, or they close by force your trade. They say because you are losing money and you don't have money in your account to cover this. For example, you have only $1,000. They ask you to put more to stay. And if you have maybe more money, for example, you have 5,000, 10,000, you will begin covering your trade, which is a loss, with your other money that you have. Okay? So, and then you see that your money, you lose a lot of money, and this will be a catastrophe for you. That's why, for me, I don't want to introduce short selling a lot, because most of the people who are in my channel are beginners. So I don't want to let them do something that they can't handle and they can lose a lot of money. For me, I am with what we call a conservative trading. Okay, conservative trading, it means you don't have to lose a lot in order to do a trade. If the market is against you, you just take a small loss and you get out. Okay, when you are good, you are right, and the market is right, it means you buy at $10 and the stock is going up 11, 12, 15, 16, 20. You are making money, so you shouldn't get out until you see that the price is going down and it takes from your profit. That's why you will exit the trade. Okay, that's why shorting a stock is harder. Now, if you want to do shorting, do it in the day. Okay, day trade. It means you short for a few minutes in the morning. For example, if you see that the stock is going down, is still going down, you buy, you sell the stock short, and you wait, depending on your time, half an hour, 1 hour, 2 or 3 or 4, and if it's going down, you exit the trade, you make some money. That's it. This is how do people do shorting. If you want to do swing trading you should know a lot. You should know a lot on how to trade. This is the most important thing. You should know how to trade, how to act, how to put a stop loss always. Because sometimes you have, for example, the stock is going down for 1 month or 2, but there one day coming, there is what we call a good news. For example, good earnings. They don't expect that, but the company said at that night that the company has gained a lot of earnings, it's unexpected. This is what we call in the market unexpected, unusual earnings, like 24% or 50% or 100%. Things change in the company. Now, if you short the stock and the next day you have a breakout up, you will lose a lot of money, and the broker in the morning, he will block your trade, he will sell your trade, and then he will ask you some money because you lose too much. Maybe you lose all your money and he asks you to put more money. That's why shorting a stock is so hard. Okay? So when you short a stock, if you want to train yourself, you should do it in virtual trading first. Okay? Do it many times. You go to stocks that always go down, you check on the chart. Some stocks that are companies are doing bad always, so you short them and you see. But it's better to do it as a day trade. Okay? If you see excuse me, a company that it is losing money for many years, it means that this company is losing money for true. So when you short the stock, study the company is better, because at least you will know, you understand why it's losing money, and you can make a lot of money. There are some people who follow these things like short selling, and they stay with the company years shorting it because they see the company is not doing good, and it's too bad. And when it's too bad for the company, some people, they make too much money, but they have a big risk. Okay, if there is a good earnings, so there is good news, and there is a breakup up, they can lose a lot of money. So these people are professional, and they are doing this for many years, and they can make too much money from it. It's like day traders. They always short the stocks. It's better to go long, exceptionally. But in bad time, like last month, like in March and this April, all the market is down. So it's better to short than to go long. Few are going long, but going good, but just exceptions in the market. Okay, so short selling is easy to do. It means just one click. Okay, short the stock. You click on it, short the stock. How many shares you want to short, and you submit. That's it. It's easy. But the problem is that it's better for me. It's better that when you do short selling, it should be in the day. It's a day trade. It means you go in the morning, you find a lot of stocks that go down from yesterday close, and you just see if that day they are going at 9:30 when they begin. If they are going more and more down, you short it. Okay, you short it. If you have time, you wait for 1 hour, 2 hours, 3 hours. You see if it's going well. If you are going well, you are making money. If the stock is going up, just exit the trade, and that's it. Don't stay with when because you short. It means that the stock is going down in order to make money. But if the stock is going up, you are losing money. So you try to see how much you can lose. $50, $100, $200, depending on how much you can lose, and that's it. And this is trading, because you can't predict 100% anything in the market. Okay? So anyone who tells you that there is a strategy or there is a way, 100% you do it, just you do what I ask you and you succeed, it's not. Because why? Because it's logical. Okay? You can't control other people what they do. You don't know what they do. For example, someone, the stock is going always good, and one day you buy it, the next morning it goes down. Why? Because someone is selling. It's very simple. So don't complicate things. Things are very, very easy in the market. Okay? Someone is buying, the stock will go up. Someone is selling, the stock is going down. Don't ask why. This is the reason. Don't ask why the market is going up or going down, because you can't. Even what you see in the news, okay? What you see in the news, what you see in TV, is just what they think is. But in real life, no one knows. Okay? No one knows, because you don't know who. There are millions of traders in the trade. How can you know who is who? Okay? They pretend that it is a company, something, news, but sometimes the company has no news. Why the stock goes down? Okay? You ask those guys who speak. The company is good. Okay? The general manager is alive. He's not dead. Okay? The managers are there. The associates are there. They are selling goods. They are making profit. So what happened to the company? Nothing. But the stock is going down. Why? Ask yourself why. It's because someone is selling the stock, not the company. Okay? You make the difference between the stock and the company. If you don't make the difference, you always stay confused all your life, and you will never be a professional trader. Professional trader doesn't think about what the company is, what it is making. They don't think about this. They think about the price. Is it going up? Buy. Is it going down? Sell. Short. That's it. If you know just this, you will make money in the market. If you try to make a philosophy, okay, to make a philosophy and you become like an analyst, because an analyst, he doesn't put his money into the market. He is safe. He tells you, oh, this company is a hold. Okay, according to general manager's statement that the company is doing good, it's healthy, we are selling more, we are above the competition, we are crushing all the competitors, we are the only people who sell in the market, and this is the reasons they give to you in order to hold the stock or to buy it. Okay? This analyst has no money. You ask him, have you bought in this company? He will tell you, no, I will not buy. I will not advise you, but just I say hold. But you tell him, put your money inside, and I will put my money inside the company. Now he will not, and no one will, because they ask you to buy and to hold the stock, but they don't do it. Why? Because it's risky. They can't risk money. For them, they don't risk the money. It's like a broker. They don't risk money. The broker gives you money to trade, and they ask you for 4%. Why he ask you for 4%? And he has a broker. He has stock brokers. They know how to trade. Why he takes 4% and he doesn't take 50%, 100% from the market? Why? Because they can't. They don't know how to trade. This is the real truth. But people, they don't understand that some other people, they are not trading, they are not investing. They ask you to invest, and they take an interest rate, or they take a fee, or they take a commission. This is how the people make money. Analysts, they are paid by companies to tell what they tell, or they are paid by the broker's firm. They say, okay, we give you some companies, say good about them. Hey, say good about them, because he is paid. He's paid to say what they ask him to say. He cannot be objective. Why? Because if he is objective, he tells, for example, something bad about the company, he will not be paid. Okay? He will not be paid. And after all, who knows the future? No one knows the future. Okay? So I go back to my video. Shorting is as simple as going long. It's the same thing. You buy and you hold, or you sell short and you hold. It's the same thing. When you do it, okay, when you do it, it's just some button. Okay, you say sell. It says sell short. How many shares you want, and is it now or market order or limit order? That's it. And you are into the trade. Okay, and then you begin risk your money. If the stock goes up, you begin to lose money. So it's better to that the stock goes down. If not, exit the trade. Okay, it is as simple as that. I will make another video which is more practice. I will show you with a chart. At least you will understand better. Thank you very much. If you have any question, as usual, just ask.